Hi everyone, it's the boys from Crescent Mortgages here again, Dan and Kai, coming to you with another one of our FAMQs.
Frequently asked mortgage questions.
Today we're going to be talking to you about portfolio buy-to-let mortgages. Now, it's a topic which could be quite complicated if we start to get into all the finer details, but we're just going to skirt over the basics, just the kind of the common things that people don't understand. And of course, any questions or feedback, just leave them in the comments. And as always, if you could subscribe to our channel, you can tune in for more helpful videos.
So what is it? Do you want me to start with?
Yeah, I think you start this one, Kai.
I'll start this one. What is a portfolio landlord? So generally, the rule that you'll see is 4 or more mortgage properties. That's the phrase you'll see. So do you have 4 properties and are they mortgaged? To be honest, most lenders, even if they're not mortgaged, will count. So do you have 4 properties that are let out?
4, yeah. 4, so
use that.
If you're applying for either a purchase or a remortgage, and on completion of the mortgage, you're going to have 4 or more, whether that's the 3 that you already own and the 4th one that you're buying, or if you already own 4 or more and you're just remortgaging any one of them, you fall into the portfolio landlord category. Now, how does that impact them, Kai?
Yeah, it changes a lot of the criteria. It makes things in places harder, in some places easier. But there is more to think about, and the regulation.
Easier?
Yeah, in some places it does.
Well,
yeah, some of the incomes disappear for portfolio landlords.
Do they?
Yeah,
there you go.
it's my area. I got this one. But the main difference is that they assess the whole. So when you buy a buy-to-let property, normally if it's your first one or not more than 4, then each one is assessed on its own merit. When you have a portfolio or class as portfolio, they now look at it all, the combined rents as well as the individual rent, the combined values, the combined loan to values, which we explained in the video recently. All those sorts of things, they're painting a picture rather than just painting one individual scenario.
They're a lot of painting there, aren't
they? They get very artistic with the regulation.
Yeah, they do. We should highlight that a few years ago, these portfolio regulations didn't exist. So it didn't matter if you had 20 buy-to-let properties in the background. Didn't matter how they were performing, whether they were, really not doing very well for you, not receiving much rental income. The lenders would just look at the new buy-to-let property that you were purchasing to decide whether you met their criteria. So it was obviously quite straightforward. Whereas now they are looking at all of the properties in the background, which means that if that portfolio isn't performing very well, the rent's not very good, not just against the mortgage, but with a stress test that they run, then it could actually impact your ability to buy that new property, even though it is in no way connected with the background portfolio.
Yeah, I think the biggest thing for me when you're looking at a portfolio, and most people will do this anyway, is you really do have to speak to brokers in that scenario. We're going to be a bit biased with that. But very few people create a portfolio without getting advice, because you have to, if you're buying properties, you have to plan, you have to know, if I buy this one and I get this much mortgage, can I still buy another one? And that's the conversation you should be having. Your mortgage broker is a lot more important normally there than they maybe are.
Don't do it without talking to us.
No.
Under no circumstances.
Yeah. I think that's a big one. But they can be done very well and very creatively.
Yeah.
But you sometimes have to think a bit differently.
Yeah. I've enjoyed that one, Kai.
Yeah, I'm just trying to think what else is bad about them. Other than the fact that you get a few more tests, it's a bit harder maybe in places, but you have less lenders to deal with, I suppose.
Yeah, that's one thing. A lot of high street lenders won't touch portfolio lending. So if you own 4 or more buy-to-lets at the point that this new one is completing, then a lot of lenders just aren't going to do it. You might go and speak to your own bank. They may just say no. So it's not the most specialist, but it is quite specialist lending.
Yeah.
There's only certain lenders that will do it. But those lenders, like I say, a lot of them will specialise in it. It's their bread and butter. It's what they do.
Yeah.
The interest rates can be a little bit higher than the high street sometimes, not always. But again, we'll obviously explore the market to make sure we get you the best rate.
Yeah. Get in touch. I think it's an important one there. Any portfolio landlords at home? I suppose.
Yeah.
Have you struggled to get a mortgage in the last 3, 4, 5 years since regulations came in? From your legacy properties, if you tried to remortgage and now you can't?
Yeah, we would be interested to know if you organised and bought your portfolio before the regulatory changes a few years ago, everything was fine. are you now finding it difficult to remortgage those properties now that they've brought in the portfolio regulations? Really interested to hear your views. Leave them in the comments, and obviously subscribe to the channel, and we'll see you next time. Thanks a lot. I'm getting good, aren't I?